David, let's start with this equity market at record highs and this idea that margins may not be insulated going into the new year. What's your take on that?
Hi, John. I would probably take the other side of that to a certain extent. I think maybe one of the most important things that's going on right now, macroeconomically, and it feeds through the corporate earnings, is that we are in the midst of a productivity shock. We see very clear evidence of that. I think, firstly, productivity growth started to inflect up in the latter half of the last decade before this crisis started to reaccelerate gradually. And I think the crisis forced a wave of investment into digital technology, which we're now seeing companies utilize to deal with a rising input cost environment and yet deliver tremendous earnings. So I think that's going to continue for a while. And I think at some point, of course, the cycle will pressure margins. But for me, look at the strength of investment, look at the strength of productivity. That's the major driver I see over the next couple of years.
Cancel the next three guests. We're going along here with David Stubbs. David, you have hit a third rail with me, which is the new capital deepening. I'm going to go back to the great productivity analysis of 15 years ago and give great credit to Credit Suisse on that. But David Stubbs, there's a new capital deepening, and it's in technology. What does that mean for the stock market?
It means great things, Tom. It means sustainable earnings. It means a capex cycle feeding into tech's top line as well. And it means significant changes, I think, both in how businesses organize themselves internally, kind of business enterprise software, plus how they talk to their clients and manage their sales force, so kind of sales software. And I think that is one of the most powerful trends we're going to see. It's a global trend. And I think it's one which has been turbocharged by the need to all of a sudden go remote, go digital, and reduce the in-person contact. And I think you're starting to see the foundations now of a significant boost in productivity for the next 2 or 3 years. What happens after that, an open question, but I'll certainly take the over on productivity growth in the next couple of years.
Which areas do you think are going to see the most productivity gains? Are we going to see it in the likes of Walmart and Amazon, which have been consolidating power and going to be more able to automate, or other sectors that perhaps are less bid up?
Well, I think certainly you can target the companies that are supplying the tools of productivity, and you see that in absolutely cloud computing. You see that in the software providers. All that's enabled by the rollout of 5G. It's enabled by the increase in semiconductor demand that we'll see. Lisa, I think that this is a very broad-based imposition of new technology across the economy, and that's what it really drives productivity cycles you can measure macroeconomically. There's the old adage recently in the last decade that you can see the technological change everywhere except in the productivity numbers. I think that is now starting to change because you've had 2 or 3 generations of some of this software. It's now being introduced and coursing through the mainstream of the economy. And that's why as we see these technologies now going from discovery to dissemination, we're starting to see the uptake cycle. And I think that's what will help, will maintain margins and drive that bottom line for most of the listed companies.
It's amazing how many conversations we're having at the moment, hardly mentioning the Federal Reserve. David, what's in that for you? The taper story, are we just comfortable with that now?
I think we are to a certain extent, John. I mean, everyone's been worried about this taper really since all year. I think the communication has been okay. I think your previous guest said there was far too many speakers and there's a lot to keep up with for sure. I think we would probably say that we don't expect a taper tantrum for sure. I think there's a question about the pace of tapering, and we still think that inflation will fade as we go into the middle of next year. We have the Fed hiking in early 23. And I don't think that's too much of a barrier to the market where we are right now. But I'm looking at the minutes tomorrow rather than a speech today for any new science.
David, you want to make a prediction out over SPX 5000? Can we get you to do that right now?
Tom, I think our official numbers are a little south of that.
Okay, but you sounded way. You got to be the biggest bull at J.P. Morgan. Mr. Diamond's going to want you up in the top office there this morning. Let's go Cobb Douglas, David Stubbs. You've got 3-ratio productivity. You've got capital. You've got labor dynamics, and then you've got this wacko thing, total factor productivity. The technological revolution that we're going to see. Where does it show up?
It definitely shows up in total factor productivity, Tom, because that's firstly very difficult to measure. It's kind of a catch-all for the things you can't clearly see day to day. And of course, Tom, we have to be careful here with the numbers. They're volatile and they get revised. You really need to wait for the third round of GDP and to take multi-year moving averages to see it. But you can see it, and that's where I think you'll start to see the real change. We're also really excited about the innovation you'll see in healthcare, and of course the push in investment through the sustainable trends like clean energy. So I think there's a whole range of technologies here, Tom, that we've all been reading about but haven't really been experiencing. And the 2020s are going to see us integrate those into our daily lives. And you're going to see a lot of investable opportunities out of that. Not all of it in large cap stocks, by the way. A lot of that's in private investments, and a lot of that is down the capitalization spectrum. But it's there, and it's certainly investable.
Classic TK, trying to get Stubbs in trouble with Mr. Diamond.
I was trying,
David Stubbs, thank you, sir.
I mean,
it's good to catch up with you.
He should be writing the MD&A for Jamie Dimon. Forget about
JP
Diamond
Morgan
writing.
Chase,
Just have Stubbs write.
Global Head of Market Strategy. Just let me complete the thank you, Tom. Just briefly, we've done. Your equity market down 21 on the S&P.
Now, or should I wait?
You don't need my permission, you know that. You just
Really?
speak anyway. We're down 0.5% on the S&P 500.
Yes.
Basically, for a while. Found an old picture of us the other day.
John, that's
from
the
about
most
10 years ago.
that's the most optimistic conversation we've had on the show in, I'm going to say, 18 months.
Yeah.
Period.
Most of JP Morgan share those feelings.
Lisa, you want to add in here?
Yeah, well, I think that it's really interesting to see the push-pull here. He basically is saying, look, people who are pessimistic about margins, the ability for companies to absorb some of the inflationary pressures, aren't looking at this increase in productivity from technological changes. There is this push-pull of these two different factors, especially as we see some of the prices increase that much more in the wake of shipping disruptions, particularly from China. I think that's fascinating. How do you even begin to measure this, right? I mean, how do you game it out at a time when many people are saying this is unprecedented, both in technological shifts
John,
as well as higher inflationary inputs?
Afterthought's got a new laptop computer required for school that was fancier than anything they took to the moon.
When's it get delivered, Tom? Next year?
No, it's delivered like now. I got it.
Okay.
He's got
We're
14.
playing Minecraft on it.
Good to know.
Yeah.
I don't know what's going on this morning. Coming up at 8 a.m, Robert Tiff of PGIM's going to join us to talk about the Federal Reserve. In about 10 minutes' time,
I
we'll
saw
head down
him
to
at
Washington,
the St.
D.C.
Regis in the bar there
Did
with
you,
a
Tom?
beautiful portrait.
Where was that?
The one with the portrait,
Nice.
with-
Oh, yeah, another one.
yeah,
Let's go visit.
Equity futures down 21. We're down 0.5%. Down to DC next. What was that speech about? That's the question that a lot of people are asking after yesterday afternoon. We'll ask that question next. From New York City, this is Bloomberg.